We're going to talk about the trusted smart chain path to utility. One of the biggest differentiators in any particular project is, hype versus utility, right? Hype and speculation versus tangibility and substance. And one of the biggest differentiators with this particular project, and one of the reasons why we've had success and we're establishing ourselves as a very, very notable blockchain and cryptocurrency project, is because of what we're going to be talking about here today. Now, every single successful long-term crypto project, yes, I am recording. Every successful long-term cryptocurrency project has to have two things to start out with. And these two things are just non-negotiable. So the first one is, Steve, you're on cue. What do I need?
You need real purpose in the marketplace. It's got to have a reason to be. Can't be a stupid meme coin or something like that.
Did I lose Steve? Meaningful purpose. Where you at, Steve? What's the first thing that I need? Oh, there we go. There we go. Is my volume down?
You need real purpose in the marketplace. You got to have a reason it exists.
Meaningful purpose in the marketplace. Now, let's talk about that for a moment. So when we talk about purpose, go a little deeper with that for me, Steve. Help me to understand just a little bit deeper.
Yeah, it's got to provide value. There's got to be a reason people would engage with it. It can't be, hey, you get involved with this project, you're going to get rich. That's not the purpose. We're talking about like what we do. What I saw with this venture was we provide access to liquidity for significant companies that are already profitable. They want to expand. Every company owner I know wants access to money. Why? To expand their business. And so when I heard what we're doing, it just made so much sense.
Thank you. I appreciate that. So let's explore that meaningful purpose just a little bit more for a moment. Let's talk about the purpose that Trusted Smart Chain serves in the marketplace today. What are some of the biggest challenges that we are addressing? Now, number one, Steve talked a little bit about capital. So let's drill down on that a little bit. Right now, companies are shifting to the blockchain as opposed to going public, especially small cap companies. Why? Because they're tired of the manipulation, the dark pools, the naked shorting. They're tired of, once they finally do get to the stock market, by the way, the cost to get there now on average is about $5 million. So it's very, very expensive to go public. And once they get there, as soon as they list, a dollar turns into 80 cents. Why? Because they're fighting bots. They're fighting, again, manipulation at the hands of these hedge funds. They're fighting people like BlackRock. They're fighting that manipulation, people that are trying to short their stock. And so it's a very uphill battle. There's a lot of risk. It's expensive, and there's a lot of red tape. So blockchain is giving these businesses a much faster, more streamlined, less expensive approach to be able to access capital. So that is one of the things that Trusted Smart Chain is doing is we're providing a universally accepted framework for the tokenization of real world assets. We're giving these companies an alternative to go and raise capital and to do it in a much safer, less expensive way that is much more transparent. So that's number one. What else are we doing? What are some of the other problems that Trusted Smart Chain is solving? What about the investors? What are we doing for them, for the retail investor?
Giving them access to opportunities they probably never had access to previously.
I love that. Access. So now, through tokenization of real world assets, these retail investors all over the world get an opportunity to be able to participate in fractionalized ownership. Most average people are not in a position to go buy a luxury hotel or to go build a commercial development. But now through tokenization, they can go to a digital trading platform, buy tokens that are digital representations of ownership or rights of distribution. And now they can participate and build a much wider variety or portfolio of these real world assets. In the old days, typically a company would go public, they would do a private offering, and the only people that get to participate in that private offering are who?
Accredited investors.
Right. Eliminates 99% of the population. But through tokenization, now the average person actually has a seat at the table. And that's what I love the most is it flips the whole, it flips the table over. And now for the first time, you've got the average person, the retail investor that gets opportunities that only the wealthy used to have. So that's one of the beautiful things. It gives them access. And what about protection? how are we providing protection to these people that want to participate in these real world assets? What are we doing there?
We forced the real world asset to file a Reg A. And that
Okay.
number one, we're going to fill out a 100+ page audit. And by the way, that's a rigorous audit. And it's not just on the financial side, it's the participants. So we weed out all the bad players. There's no bad actors that get through that Reg A process.
That's right.
And Travis, if I could back up 1 second on that word, that fractionalized ownership, I sometimes insert right there the fractionalized ownership. If you look at it like if you went and bought a stock, you're really buying a fractionalized piece of that company, right? So when you think of this, it's not something brand new. It's the stock market is fractionalized ownership. Fractionalized ownership, though, on the blockchain space, it's tokenization. So when you understand that and get that parallel in your head, it is a clearer picture of the puzzle.
Well said. Thank you. So, protection from a Reg A, one of the things that's been lacking in the cryptocurrency space, and one of the biggest challenges is there has not been a framework that leads to investor protection. If we were going to take a company public, there is a roadmap to do so. We would go and have a proper, first of all, we start with an audit to establish value. We would have a proper registration, get an Edgar filing. We essentially from there would tokenize based on that valuation. And then we would have to be fully compliant, registered and compliant with the Security Exchange Commission, and we would have to have annual audits thereafter. Now, those annual audits, those are important because what that's doing is it's ensuring that all of the assets and all of the money that they raise is properly tracked, properly valued, and secure. Because one of the biggest challenges in this industry is with cryptocurrency, none of that framework exists. Therefore, a lot of times you've got companies that are starting with a value that doesn't make any sense because there was no audit. And then, of course, there's no proper tracking and reporting. And so a lot of times the money just disappears. And then, of course, they love to go out and use terms like backed by. We're backed by gold. We're backed by oil. This token's backed by $1 billion in businesses. The reality is, if there's no audit, they don't have to prove it, which leaves a lot of room for misrepresentation. So we've got a meaningful purpose in the marketplace. We are, to our knowledge, the first blockchain in the entire world that is requiring these standards. Now, let's talk a little bit more about the second one that you've got to have here, which is what? What do we have to have a long-term successful project in cryptocurrency?
You've got to have a path to utility.
Path to utility. Now, this is key. This is where we transition from hype to speculation. Let's go back to 2017, 2018. It was the hype of it was the peak of hype, right? So you had the initial coin offerings, you had the celebrity coins, all of these different types of rug pull projects where they were issuing large amounts of tokens to the developers and to the people that were, these influencers and celebrities that were launching these tokens. And the problem is that they would launch, they would go tell their followers to buy, people would rush to buy the coin, the value would go up, and then those that hold the majority of the tokens, usually a small group of people, sell and pull the rug out from underneath them. And that's happened over and over and over again. When you look at most of the projects that are out there today, and I'd say most, and I'm going to put an emphasis on that, they are relying on hype to drive people to buy the token. They go get celebrities or they go get large organizations, could be network marketing, could be outside of network marketing, to go create a bunch of hype. And what they usually do is they talk about what the future value is going to be. They speculate, they set false expectations, and they get people to go buy, which drives the price up. And when hype leads and utility lags, you're going to have a short-term spike followed by a crash every time. But when you study the long-term projects, when you study Bitcoin, when you study Ethereum and Solana and XRP and some of these other projects, there's real world utility, real world case use. So to summarize, give me a summary of utility. Steve, what's the best definition of utility in your mind?
The best definition of utility is the word usability. I frequently pull $100 bill out. I have one right here for handy purposes. I pull that out and say, why will almost everybody on the planet take that? And the reason is because you can go get groceries with it. You can go fill your car up with gas. You can get the kid across the street to mow your yard. Almost everybody will take that in exchange for goods and services. And so really the question, the path to utility, the question you're asking is, can we ever take this digital reward that we get from mining and someday convert it in a real world kind of way to that thing right there? That's the question.
Amen. All right. So why is Bitcoin worth $120 $114,000 today. I don't know why I looked at my watch, but $114,000 today. It's because it's transitioned to,
Demand,
that's right,
supply and demand.
demand. That comes down to demand. See, in the early days of Bitcoin, and I would even argue the first 10 years at least, Bitcoin was more of a hype driven coin. People bought it hoping to get lucky. People bought it hoping to time it right or to be able to catch the next pump after the halving event. But something interesting happened after around 2021, 2022. People started realizing that Bitcoin was holding its value better than the US dollar. Think about this. In the last 3 years, the US dollar has lost 25% of its value. This year alone, it's lost 10% of its value since the beginning of the year, their worst performance since 1983. So now people started realizing, wait a second, dollar's down 25%, Bitcoin's up 1100% in that same period of time. Why wouldn't I go buy Bitcoin? And so Bitcoin started to transition to this utility token because it actually now, people weren't just buying it to get lucky, they were buying it because it was currency. They were buying it because it had stored value, no different than silver or gold, and maybe even better than silver or gold. But here's the thing. Now, today, the US government is acknowledging it as currency at the highest level. There is no more debate. There is no more argument. Our government is putting it into their overall strategic reserve. And when that happened, it transitioned into a utility token. Again, utility just means it has real world case use. So, with that in mind, let's talk a little bit about what is the trusted smart chain utility. So, first of all, let's talk about the process that the RWA goes through. So, we've already talked about this. They start off and they go out and they get a audit, right? So they establish their value. Once they get an audit, they have their value. Then it's now time to structure properly. They typically work with a consulting firm that helps them go through that process, set it up, help them to get through that 100-page filing document. So they go through that audit phase. They file their Reg A. Okay. And once they file their Reg A, now they're just waiting for that approval to come back from the SEC. Once it comes back, they now get to go and list their token. Okay. Now, once they list their token, here's what happens. So usually about this point, the RWA partners with a media company. And the media company is experienced. They've done this before. They've helped companies raise capital for many, many, many years. And this media company is going to go out and they're going to just push this. They're going to go out and solicit and advertise. And they can legally do that. Why? Because the RWA is now a registered security. And because it's a security, they get 12 months to go do a capital raise. They partner with a media company and they go out to social media and all of these other places and they start talking about the opportunity. Now, let's say that this is, and by the way, you probably have seen these in your news feeds on social media. You just didn't recognize that it was a Reg A that was raising capital. Now that I understand this process more, having been here and working with Trusted Smart Chain for quite some time, I see them all the time in my news feeds. Come invest in this oil well. Come invest in this oil project. So here's what happens. Potentially thousands of people come to the table and they say, you know what? I want to invest in this RWA. Now, why would they be interested in investing in this RWA? Well, there's a couple of key reasons. First of all, number one, there's a new demographic of people that are coming into cryptocurrency today. This new demographic is different than the people that were here the previous 10 years. The people here previous 10 years, big risk takers, hoping to get lucky. A lot of them are gamblers. They were trying to get involved in meme coins and just time them right. The new money and the institutional money that's coming in, they're looking for protective measures. Number one, they want tokens that are actually backed by something real, something physical, something tangible. That's why tokenization of real world assets is absolutely exploding. Number two, they want investor protection. That's why the audit in the Reg A is so critical. Absolutely critical. And I'm going to stress again that Trusted Smart Chain, to our knowledge, is the only blockchain in the entire world that requires every real world asset to go through that process. So they come in here and they invest in these real world assets. Now, real world assets during the capital raise are offering a 10% distribution on average. You see, the new money that's coming in, the smart money, not only do they want real world assets that are backed by something real, not only do they want investor protection, but they also want distributions. They're used to looking at opportunities, being able to look at that Reg A filing, look under the hood, look at the financial statements, look at the assets, look at the cash flow, look at the history of the business to be able to make a well-informed decision. And if they invest their money, They're used to getting distributions. So now in this case, here's what happens. So these real world assets that are coming onto the trusted smart chain, it's very important that I put this out there and make sure that everyone understands we do not get involved in any of this process. That's all done at the Reg A level. They're working with consulting firms. They're working with media companies to raise capital. We at Trusted Smart Chain do not solicit for any real world asset. That's not our responsibility. We're down here. We're the blockchain. What's the blockchain's main purpose? Anybody? What's this main purpose of a blockchain? What does a blockchain do?
Validate transactions.
That's right. We validate transactions. We are the infrastructure. We are the security, right? We're validating transactions. We're essentially providing the integrity and the security for the network. Now, every single real world asset, when they tokenize and they create their coin, has to live on a blockchain. And that is where Trusted Smart Chain comes in. That's what we do. We provide the infrastructure. Now, here's where it gets kind of exciting. So all of this to lead up to the first main real utility that I want to talk about today is all of the real world assets that are being listed on T7X. Now, T7X is one of our grant recipients. Okay, T7X is a licensed digital trading platform, no different than Coinbase, Crypto.com, or Kraken. Okay, people, they list tokens on their exchange, but they don't just list any tokens. They list tokens that are real world assets only. Who are they appealing to? Instead of looking back and saying we're going to go after the crypto bros that have been here for 10 years, they are appealing to the new demographic, the new money, the retail investor that's coming into the industry. The analogy I would give you is think of Robinhood. 10 years ago, they launched a platform, removed the barriers, and gave the average person access to fractionalized shares of stock and the ability to be able to manage their own portfolio. Well, T7X is doing the same thing. They even hired the same development team that Robinhood used to build that really cool platform to build their platform. So T7X is a licensed digital asset trading platform. All they do is they take these real world assets and they list them on their trading platform. Now, here's the cool thing. All of these investors up here, these thousands of investors that are investing are getting a 10% distribution. Well, the RWA manager is required to use the Trusted Smart Chain token to pay those distributions. So let me tell you what that means. So if I'm a real world asset manager and I own a luxury hotel and I am tokenizing, and by the way, this is a real example. We have luxury hotels that are down in Tulum right now. We have a real world asset manager. He's a billionaire. His name is James. Many of you have had a chance to be able to meet James and listen to James and talk about why he's tokenizing, why he's utilizing the Trusted Smart Chain. So James is going through this process. Now, when he gets his Reg A back, he gets his token listed. It'll be listed on the T7X digital platform supported by the Trusted Smart Chain blockchain. Now, here's what happens. James starts raising capital. These investors start coming to the table because they think this is a great opportunity. These investors here are entitled to a distribution, a 10% distribution every quarter. So if Dean, you come in and you put $100,000 into that real world asset project, to that luxury hotel, and they're offering a 10% distribution, that means you're going to get $10,000 a year. You're going to get $2,500 a quarter. So that real world asset manager has to pay you, but he has to pay you using the Trusted Smart Chain token. Now, who can tell me what the average value or valuation is of the projects that we have in process that are currently tokenizing on the Trusted Smart Chain?
50 million.
50 million. Okay. So the average is 50 million. So if they're paying out a 10% distribution, how much are they paying out per year?
That's 5 million.
So 5 million a year. This real world asset manager, 5 million, they're paying out over here to these people that invest every single year. Well, I want you to think about this for a moment. 5 million a year, our goal in year one is 10 to 12 real world assets. Year two, 20 to 30 more. By year three, 100. So let's say 3 years down the road, we hit our goal. We have 100 real world assets on the Trusted Smart Chain blockchain that are paying out on average 5 million a year to their investors. That's $500 million in annual demand, guys. 500 million. That should be in red because it's just, think about this, $500 million in annual demand for the TSC token. Now, here's the most important question. Who are they buying it from?
Us.
Yes, you guys, the node operators, right? And these node operators, they own these nodes, right? They're working collectively together, kind of like cell phone towers support the network. These nodes are working collectively together to support all these real world assets. And in return, they're earning these little tokens every single day. I got to tell you, it's a highlight of my day. I wake up every day, I look at my wallet, and I got another deposit every single day. Does it put a smile on your face, Gary, when you wake up every single morning and you have more tokens that were deposited into your account? Every day for the next 120 years. So listen to this. So you're earning all these tokens. Now, once the token lists, which we're very, very close to our listing, here's what happens. You have three choices. You can hold them, right? Or you can sell them every day if you want to. It's first option. Second option is you can swap them. Third option is you can actually stake them. I keep saying there's three options. There's four. Or the fourth option is you can stake and hold them, which I guess is kind of the same thing. So you can sell, swap, stake, and hold. Okay? So here's the cool thing. When you sell these tokens, they come over here into the open market, right? They now they're flooded, they're going into the market. These real world asset managers have to go to the market with their fiat currency and buy trusted smart chain, and they've got to pay those investors. But they're buying it from you. And here's a beautiful thing. You get to decide when you want to sell. Just like with Bitcoin, if I was operating a miner on the Bitcoin blockchain in the early days, in the first 4 years, 50% of the total supply of Bitcoin was distributed during the first 4 years. Trusted smart chain works the same way. And I earned a ton of these Bitcoin that I'm sitting there holding, and I could sell when it was at $7, $700, $7,000, $70,000, or $115,000 yesterday. People always ask me, well, how much am I going to make? I don't know, because I don't know when you're going to sell. And we don't guarantee returns on investment. Why? Because we can't control what the market does. The market dictates the price. And what ultimately drives the price? What's the number one variable in almost any market project that's out there, any project that's in the markets? What's the number one variable that ultimately dictates the price?
Demand.
That's right, utility. Well, we go get 100 real world assets, then we go get 200, then eventually 300, and then 500. But what if we have 1,000 in 10 years? And those 1,000 people are gobbling up these coins so that they can go pay their investors, and you're the one holding them. Pretty good position to be in, right? What happens to the housing
Call that
market?
a great day. That's a great day.
A great day. Housing market, if there's low supply and there's a big demand, what typically happens to the price of those homes?
Go up.
Now, watch this. What if we do 10 to 12 this first year? Let's just say we hit 10, okay? And each one's paying out 5 million on average. $5 million times 10 is 50 million. All right, so 50 million in demand from the real world assets in year one, potentially based on getting 10 people in the door. Now, who can tell me how many tokens come into circulation in the first year with Trusted Smart Chain?
2.6 million.
Okay, so 2.6 million is going to go out to these node operators, and ultimately the nodes, and ultimately the node operators that own them. So 2.6 million is going to go out to the active node operators. So there's 2.6 million. Now, let's just say a third decide to sell. I think it's, again, I don't have, anybody can sell at any time. There's no lockup period, no requirements, but let's say a third of the people that have earned 2.6 million decide to sell all of their tokens. So in that case, what is that, Steve? How much is that? 2.6 million. That's what?
That's roughly 900,000, 850,000.
Okay, so let's just say 900,000. Let's say there's about 1.7 million now that's still being held in wallets, and about 900,000 went into this circulation, right? They're open to the open market. So there's 900,000 that actually have gone into circulation. The other 1.7 million, Dean's holding, Gary's holding, Brenda's holding, Chris is holding. Why? Because they know that every real world asset is just going to increase the demand for those tokens. But, some people sold, and that's their prerogative. Okay? But man, got a problem here because there's a $50 million demand, but there's only 900,000 tokens in circulation. How in the world can we meet that demand? What's the only way that demand can be met?
Price has to go up.
You said it, not me, right? I mean, I don't. Is there any other way possible? So even from the very beginning, now watch this. If I'm a real world asset manager, think about this for a moment. Is it in my best interest when TSC lists on the exchange, right? And it has a listing price, whatever that listing price is. And then it's going to do what it does, whatever markets do, right? It could go up, it could go down. We can't control that. The market controls that. But when it first lists and kind of have a baseline price point, is it in the real world assets manager to start buying potentially before it goes up so that he can access those tokens at a lower price point? Or is it better for him to buy them when they're a lot higher?
It's always best to buy when they're less.
So if you're a real world asset manager, Steve, you know that you're going to start paying distributions soon, 90 days, 180 days even, right at the very beginning when TFC is listed. Would you want to access those tokens at as low as possible price point?
Yeah, I'd probably start acquiring tokens.
Now, in addition to that, think about how a thermometer works in your home. Let's say it's set down to 69 degrees, starts to get cool, gets to 68, your heater kicks on, and it starts to warm the house back up. Well, think about this. Every time that the price starts to do this, TSE token, what do you think is probably happening right there? What are the real world
asset managers buying?
What happens when there's more buying than selling?
Price goes up.
So if we have 100 real world asset managers and real world utility, what essentially happens is, and I'm going to use Bitcoin as an example. In Bitcoin's case, let's put it that way, the last time that Bitcoin had a significant crash, now I'm not talking about volatility. Volatility is always going to happen. It'll fluctuate. Was 2018 in the fall. It lost 92% of its value. Why? Because it was highly speculative at the time. Why? Because it had no real world utility. When you have utility, it tends to lead to longevity. And that is the key. So again, why is Bitcoin worth $115,000? Because of real world utility. What has Trusted Smart Chain been able to accomplish? By providing a pathway to add capital, access for the retail investors, protection to these investors, meaningful purpose in the marketplace is we have created a utility unlike any project that is out there. And that ultimately is why this project has become a tremendous success. Now I'm going to give you one more utility here, and then we're going to wrap it up for the day. Any comments here while I'm cleaning my board?
Yeah, I've got a buddy that became a multi-billionaire in this space by mining cryptocurrency. And he told me that, when you get $100,000 of volume a day in your token, things get real interesting regarding that token price. He said when you get to $1 million a day, that's where the magic happens. If you go back to that before you already erased it, but you had 500 million up there. Well, simple math, 500 million a year demand. That's our 3-year target. 500 million in demand. That's 1.5 million a day. And so I'll let you draw the parallel, but I'll tell you this, as I was studying this, I said, you know what? It's got massive purpose, far better purpose than almost anything I've seen in years and years in the blockchain space, but it's got a path to utility that surpasses any project I've ever seen. And that counts the biggest names you've seen in the blockchain space.
And
Love it.
a quick point too, as we're talking about the distributions, let's look at a market perspective. Okay, there's millions and millions and millions of traders, bots, AI bots, all kinds of platforms, right, that are out trading in the market, right? Whether it's the home guy that's putting $500 in to make $20 a day, right? Or again, these large AI institutional bots where you can go out, you could get a membership and the bot trades for you, put your money in, and there's millions and millions of dollars that goes out and scours all of the exchanges to find well, let me ask Travis, what do you think those bots are looking for? What kind of trend? They're looking for tokens that have an upward trend. And what they do is they latch on to that upward trend, right? Like say you see a token go up, 7%. Well, then those bots will bring their whole community in. Now it'll go up 15, right? And then some of those will sell off and take profits and it'll go back down. But what I'm saying is every other exchange out there, and T7X will have market making and all those things down the road as well, right? And we'll obviously look, the goal isn't to have just TSC on T7X. We're going to start there, right? But obviously the goal is to get out to as many exchanges as we can to get the TSC coin exposure to, all the traders, all the bots, everyone else out there looking. From a confidence standpoint, okay, if the trusted smart chain coin is believed to be valuable enough, and I don't mean valuable in a dollar amount, I mean value about an inherent value, an inherent right utility and purpose token, to where hundreds of millions of dollars is being purchased by millionaires, billionaires, investment banks, etc., right, to facilitate distributions to thousands and thousands and thousands of investors that aren't looking to do the meme coins and all the crazy stuff. They want safe investments, right? And I can say investments because those are registered investments. What kind of confidence do you think to the outside world that gives to the trusted smart chain coin if massive institution asset managers and business owners are using it to facilitate, as well as these large pools of investors that are coming in to these projects, right? We're not talking about, oh, we just, have this utility coin that kind of goes back and forth. And, there's power and there's substantial market confidence in it, in a properly structured blockchain, which is why we did the DAO the right way, which is why we have the contract set up, which is why the grant and everything is done through legal, which is why everything we're doing is buttoned up top to bottom. We could take some shortcuts, and most likely, guys, under this administration, we'd probably be fine. To be completely honest with you, right? But the more that we button everything up, the more confidence that we give to our blockchain and our token that these large institutions are using it. What do you think the general feeling and the general idea is going to be once we start getting on multiple exchanges, and that confidence bleeds into all the day traders, all the bot traders, all the AIs pick up on it. The home traders. That's the goal, right? The goal is to say we have a coin and a blockchain that is so trusted that hundreds of millions of dollars from large scale real world assets are using this to do their distributions to thousands and thousands and thousands of smart money investors that are looking for solid, safe, reliable projects, right? There's a reason that XRP has the backing and the hype. Now, they haven't launched yet, and they've dealt with a lot of regulation scrutiny, right? But let's assume that they didn't, okay? Let's assume that they never got it sued by the SEC. XRP could be a couple hundred, a couple $1,000 coin at this point. Now, I don't ever believe XRP is going to 10 grand. People do. But point being is, when you have large institutions trusting in your blockchain, that gives a whole new experience to the market. And from an outside perspective, once we have, guys, even the first, right now, there's 4 Reg A's written. There's one that's been filed. It should pop up here on Edgar very soon, probably in the next couple of days. And the team is diligently working. We have someone flying into the office literally today. I am taking them to dinner that owns outright hundreds of millions of dollars of real estate in another state. And we are meeting this week. He's flying out today. We're going to dinner tonight. We're meeting in the office the next few days. He will be here till Sunday on structuring the first handful of his assets. That's probably another 2 or 3 Reg A's right there, right? When we have the first 4 or 5 Reg A's on, and our trusted smart chain coin and our blockchain is the housing for all of that, the amount of consumer confidence that's going to go out there to the general market, we're going to have exchanges asking us to list.
Love that. Thank you, Billy. Appreciate you. All right. So that's a great lead into the second utility that I'm going to talk about today, which is the currency reserve. So each one of these RWAs that is tokenizing is required to set aside 2.5 to 10% of their capital raise. Now, the difference is the risk factor. So we start off with green, and then we have yellow, and we go all the way to red. Right now, we're working primarily with green, but in the future, we may start to add some yellows and reds in there as well. Now, here's the thing. Think about this for a moment. If I'm raising, let's say, $50 million, if I'm raising $50 million, talking about, what is that, $1.25 million? Is that right? Is that the right number?
Yeah.
$1.25 million that I have to set aside, but I'm not just setting it aside. I've got to set it aside, and I actually have to go buy TSC coin with it. And then I've got to stake it for 5 years. Now, I want you to think about this for a moment. We talked before. Let's just use that year one as an example. We said, okay, if 30% sell, we have some 900,000 in circulating supply of TSC in the first year. But now the real world asset managers are not only buying out of this to pay their distributions, they're buying out of this because they have to lock up some of their capital. Why? Because T7X digital platform, trading platform, requires them to do so for investor protection to ensure that they have the capital and the money to be able to pay those distributions. So what this is doing is it's actually reducing the overall circulating supply. So now, as every real world asset manager comes on, you've got a growing demand, but you also have a diminishing supply. What happens in the housing market if there's 100 homes, 1,000 people are trying to buy them? First of all, what happens to the price of those homes?
Goes up.
Right. Now, what happens if BlackRock comes in, buys 50% of those homes, and now there's only 50 left? What happens to the remaining 50 from a value standpoint?
Goes up more.
Right. So now you're sitting in a pretty good situation. So now we're reducing supply. And I'm not going to get into the tokenomics today. You can watch the next video to learn more about our tokenomics and the distribution schedule. But what I can tell you is that we copied Bitcoin's tokenomics to a T. Why? Because they're the master. They distributed 50% of their tokens in the first 4 years. We're distributing 50% of ours in the first 4 years, which puts those node operators that are involved in the early stages in the same position that those miners that were supporting the Bitcoin blockchain were in from 2009 to 2013, when the distribution was its highest. 10.5 million of the 21 million total supply of Bitcoin went out to those miners. Today, a word for that would be node operators. In the first 4 years, you can still go buy a Bitcoin miner today on eBay. You can activate it, connect to the network, start earning Bitcoin. The problem is they've gone through 4 halvings and the distribution is nowhere near where it was in 2009. So the second utility is the RWA currency reserve. And the third one, I just want to talk about this real quickly, is we have T7X, grant recipient, compliant in 7 continents around the world. They're a digital trading platform, the same as Crypto.com, Coinbase, and Kraken. These guys are the ones that the real world assets are listing on. What does that mean? People can come to T7X, open up an account, and now they have access to these real world asset projects. Who's coming here? Smart money, right? The smart money is coming here to T7X because they know, hey, this is a platform that's going to provide real world asset projects that I can participate in that are actually registered securities. They have been validated. They're fully compliant with the SEC. I can look at their registration statement. I can make a well-informed decision, and they're paying on average a 10% distribution. So here's what's happening. The cool thing is that T7X requires or is utilizing TSC token as their preferred token of choice to facilitate their entire ecosystem. What does that mean? It means that they pair every one of these real world asset projects to the TSC coin. What does it also mean? Every single account holder, and they have access to thousands of investors all over the world. Every single account holder, when they open up an account and decide that they want to invest into these RWAs, and they're now holding that RWA token, anytime they buy, sell, swap, or trade, they have to have TSC in their wallet to pay their gas fees. What are gas fees? Transaction fees. Just like Binance. If you've ever been on Binance, one of the largest exchanges in the world, they have what's called their native token. Their preferred token of choice is BNB. Anybody that operates on Binance transacts, and it's not just a Binance account holder. Any single token that Binance lists, and Binance has hundreds, thousands of tokens that they've listed, layer 2 projects, and all the people that participate in those, guess what? They have to have BNB in their wallet. to transact. Do you guys realize that has driven BNB to almost $1,000 price point? Hit an all-time high. It was 880 a couple of weeks ago for one reason, because it has practical use. Practical use. See, BNB doesn't need hype. They don't need people out on social media talking about, oh, this price is going to be worth, this coin's going to be worth X in the future. You can't do that. If you're doing that, you're speculating, you're setting false expectations, and you're turning your project into a security, and you are now at risk of the SEC coming at you. People ask me all the time, well, how long is it going to take to get my initial investment back? I don't know. There's variables there that are out of my control. Number one, I have no idea when you're going to sell. Number two, I don't know what's going to happen to the price of the token. Here's what I do know. And then I ask them a question. Why is Bitcoin worth $115,000? They say, ultimately, they arrive at the conclusion that it's demand. Great. Well, let me tell you what we have done to create utility within our community. And then I ask them another question. Based on the utility that we've created, the utility that we've talked about today, and by the way, there's other utilities on top of this. We're touching on the main ones today. What do you think is possible? Another way I like to answer that question is this. First of all, we don't offer any type of guarantees or returns on investment at all. This is not an investment. We sell software. Just the same as you could go buy a Bitcoin miner on eBay, plug it into the network, start earning rewards. It's the same thing here. Okay, so we don't offer any type of guarantees of return on investment in any way, shape, or form. But here's just my personal opinion. I always say this, I'd be foolish to sit here and say we're going to be the next $100,000 token, right? That's the hype that we tell people stay away from, right? The truth is good enough. But, here's the other thing. I also think, Steve, that in the future, maybe 10 years down the road, that there could be dozens of coins that are worth $100,000 with the way that cryptocurrency is going. And with the utility we've created, I don't know why we couldn't be one of them. Can't guarantee that, but man, you know what? What if I'm 99% wrong? What if, right? No guarantees, but what if I'm 99% wrong and our token hits $1,000? Is our project a success?
Massive.
Are you guys happy? As an operator?
Extremely.
Now, again, I can't guarantee that, but what if I'm 99% wrong? My personal belief is this. There's a convergence of forces that's happening here that just it's the perfect storm. You've got the US government that basically has just given the green light for $16 trillion of assets to tokenize. They're all looking for one thing. They're looking for somebody that can provide a pathway forward to liquidity and to keep them out of trouble with experience. We have that. They're looking for a blockchain that can support their project. We have that. We happen to be, to my knowledge, the first in the entire world to require the standards that we have set and established to provide investor protection and ultimately to give these businesses a pathway to utility. So you've got what's going on with the government. You've got $16 trillion that's coming down the pipeline. And now cryptocurrency is no longer in question. There's no longer a war against crypto. David Sachs, the head of the SEC, said it just a couple of weeks ago. The war is over. We're inviting innovators to the drawing table. The United States will be the cryptocurrency capital of the world. Regulation and clarity is coming. 19% of the current US population has a cryptocurrency wallet today. Where do you think that'll be in another 4 years? Trusted Smart Chain is positioned to be one of the most prominent blockchains that is facilitating the fastest growing segment of cryptocurrency that we've ever seen. And we're sitting right in front of it. We don't need all $16 trillion, guys. We need a tiny little sliver of it to create so much demand for the tokens that you guys are earning that it's going to be a really fun future.